McGraw-Hill Professional presents The Caterpillar Way: Lessons in Leadership, Growth, and Shareholder Value. Written by Craig T. Bouchard and James V. Cook. Narrated by Gary Macfadden. Chapter 1. The Quest for the Holy Grail. This book is about greatness, and specifically about Caterpillar Inc., a superb example of a once struggling company made great by a deliberate sequence of astute management decisions. Caterpillar today is the world's leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives. Financial analysts say that its global market share is increasing, and that it is churning out profits. But things weren't always this way. In 1984, Caterpillar lost $1.17 million every day as it suffered through its third down year in a row. There were whispers that bankruptcy could be somewhere down the street if Cat, this is how most people close to the company affectionately refer to it, could not turn things around. However, turn things around is precisely what Caterpillar did, even as many similarly situated firms fell into the ditch. In 2012, Caterpillar was ranked number 46 on the Fortune 500 list of the largest American corporations, up from number 58 the previous year. Its composite revenues and sales were $65.88 billion in 2012, a tenfold increase since 1984. In November 2012, Caterpillar's annual sales were 1.9 times as large as those of its nearest American competitor, Deere, and 2.7 times the size of those of its largest international competitor, Komatsu. Between January 2, 2001 and January 2, 2013, Cat's stock price rose an amazing 443%. While the S&P 500 increased only 12.3%. Further, the company's dividend per share increased 269% between 2001 and 2012, and now has increased 20 years in a row. By any standard, these achievements represent conspicuous success and help define what it means to be great. Nevertheless, the topic of good versus great is once again in vogue because on closer inspection, so few things seem genuinely great. Not in the United States, not in Europe, and not in the BRICS, Brazil, Russia, India, and China either. Consider the implications of this assessment. It's increasingly difficult to find the qualities usually associated with greatness either in countries or in companies. The BRICS, for example, used to be synonymous with dynamic economic growth, but now that their growth has decelerated, they appear more vulnerable, and it is possible that they may lead the world into recession. It seems apparent that the global economic environment has changed, perhaps not forever, but certainly for the foreseeable future. As authors and as businessmen, we have glimpsed greatness a few times during our careers. Truth be told, getting a small whiff of it in our prior experience building S-Mark Inc. and Shale Inland, both billion-dollar steel-related enterprises, made us eager to explain why some organizations are able to scale to higher levels of productivity and performance while others flame out and fall short. We sense that we're not the only ones who want to know why. This is a topic of great interest not only to directors, CEOs, and managers of companies, but also to investors, large and small. Unfortunately, never in our lifetimes have so many managers and investors been so confused and uncertain about what constitutes the path to great business performance. In today's equity and bond markets, this insecurity translates into massive doubts about how and where one should invest. It is not a mystery why this is so. Unmistakable uncertainties exist with respect to Europe's ability to work through its financial crises. The Middle East is a tinderbox. The
Sample complete. Ready to continue?